Forbes reports that U.S. Vice President Joe Biden will soon sign an executive order that could have far-reaching consequences for XRP and the cryptocurrency market as a whole. In addition to the question of whether or not XRP can break the $100 barrier, another related question is whether or not XRP can gain a share of the $1 billion daily repo market that JP Morgan currency claims it can move. Finally, what are the most important factors that will determine whether or not the Ripple and SEC lawsuits are settled? In order to find out more, I invite you to watch this brand new film and stick with me until the end. We'd like to extend a warm welcome to everyone who might find our channel's discussions of current events related to XRP and the cryptocurrency industry interesting. Forbes suggests that the decision could affect the value of XRP, Bitcoin, and other cryptocurrencies. Particularly notable is senior Forbes contributor Billy Bamber's observation that the recent increase in the price of XRP Bitcoin and the broader cryptocurrency market coincides with his prediction of a crowded market, since the leak story contains information about the order that was still pending. Some market participants have hypothesized that BlackRock's application for a spot exchange-traded fund sparked the current upward trend. Bamber stressed that the upward trend shows Wall Street is becoming more interested in cryptocurrencies. However, according to the top Forbes contributor, the United States government could be to blame for a major shift in the pattern. Particulars of the impending executive order are emphasized in a notable way by Bambaro. He said there were rumblings the U.S. government posed an economic threat. Discloses that President Biden will soon issue a detailed directive on AI. According to Ford, this action has sparked widespread concern in the cryptocurrency market. Bambara, who noted that the legislation is an attempt to address the reliable and safe deployment of AI, said that the director should be made public in the coming weeks. Forbes further suggested that the regulation may stipulate pre-implementation testing and model procedures, by mandating the evaluation of and models before they can be utilized by government workers. The directive is likely to help reduce barriers for highly qualified professionals looking to migrate to the U.S. to work in the sector. Forbes reports that some cryptocurrency experts are worried that the executive order would label computing energy as a national resource, despite the fact that the order's features are designed to improve our procedures. The report suggests that cloud service providers like Google and Amazon may be compelled to reveal client purchases of computing resources used for purposes like Bitcoin mining if they were obligated to do so by law. Concerns about the impending directive have been voiced by Alexander Grieve, head of government affairs at Bitcoin investment firm Paradigm. Grieve likened it to a computer power equivalent and an operational choke point. Concerns have been raised about this potential change since it could reduce the available computing power that Bitcoin miners can buy, and so reduce their output. This might have an adverse effect on XRP and the cryptocurrency industry as a whole. If you want to be the first to hear about any XRP-related updates, make sure to click the bell and subscribe to our channel. He explained his perspective on Twitter by referencing an article from Ledger Insights and highlighting the fact that the vast majority of JP Morgan coins are transferred on an intraday basis. The study focused on Tachiles's feedback. According to an interview given by JP Morgan's global head of payments, Giorgio Capelius, to Bloomberg, the company's newly launched cryptocurrency, JP Morgan Coin, is already making waves in the blockchain-based payments sector. Tokenized deposits and foreign money transfers are two of its most popular usage among large corporations like Siemens Treasury. Collateral management networks and intraday repositories are tokenized as well. According to GA Copulas, by the end of June, their repo system, which is responsible for the vast majority of transaction volume, had processed $300 billion in trades. The bank has looked into ABC Bank's overseas transactions and increased JP Morgan to include euros in a KO. Georgia, in an interview with Bloomberg, Kapil dropped a clue regarding a consumer-friendly version of digital deposit tokens. As a result of these enhancements, daily volume may rise even further. In a recent interview with the Empire podcast, Tyrone Lubin, head of blockchain and Onyx digital assets at JP Morgan's Onyx project, said that the company processes over $10 trillion per night. Logan compared this number to the combined size of the US dollar and the US dollar coin. In terms of market value, they are the two most stable currencies. In the interview, he stressed that the $25 billion that these stable coins process is 400 times less than the volume that JP Morgan can achieve. Shearson P. Morgan is now exploring blockchain's potential uses in depth. The bank's involvement in events and public blockchain testing for deposit tokens is evidence of its dedication to the blockchain space. The potential for XRP to reach comparable volume was recently emphasized by Wall KS comments. Due to its many advantages over JP Morgan coins, XRP is in contention for a sizable portion of the daily repo market. For instance, in comparison to JP Morgan coin, which is managed by JP Morgan, XRP is more decentralized and interoperable since it uses a permission ledger. XRP is capable of exchanging euros for USD as well as a wide variety of other currencies and assets. In addition, the asset enables instant and cheap international transactions. A larger and more diverse community of people use XRP. If XRP can capture a portion of the $1 billion daily repo market that JP Morgan currency pledges to trade, it might see a significant growth in its value and adoption. Recently, notable XRP community member and early Ethereum advisor Stephen Neary joined to the discussion that XRP might eventually be worth twice or even triple what it is today. An XRP supporter recently tweeted, asking Neary for his predictions for the cryptocurrency. He wanted to know if XRP could reach ridiculously high prices of $10 or $100. Neary acknowledged the difficulty of answering such a question directly. However, he did summarize his thoughts. The former Ethereum advisor had previously expressed hope for XRP. Near as I can see, XRP has no ceiling. Neerav argues that there may be no fixed limit to XRP so long as teams using it to build ventures are successful. One option is to promote the use of XRP as a global currency. According to Neera's research, Ripple is a tough foe when considering network effects. He thinks the tides are turning in favor of Ripple's widespread adoption. Because of this, XRP's popularity may rise. Neerav added that if Ripple is successful in completing the concept, XRP's price may be uncapped since it will become an integral part of the ecosystem. After it is done, XRP will be required. In addition, an ohmmeter limits how far off you can be at that point in time. Neary have gone on to compare it to the US dollar, noting that the latter is extensively utilized and acts as a global standard due to network effects. Canario argued that the dollar's value seemed to have no ceiling. The value of the dollar may be declining over time, but its purchasing power remains stable. He thinks the US dollar's role as the world's reserve currency gives it more value than it actually has. The story also guessed that XRP might be used as a reserve currency. He also wonders if the unjust targeting of ripples by powerful parties has anything to do with XRP's potential to upend the current financial system. In an effort to show that his observations were not distorted, Neary made it clear that he does not currently hold either Ethereum or XRP tokens. Here comes today's burning inquiry. What are the key factors that will determine whether or not the Ripple and SEC lawsuits settle? If you want to be the first to hear about any XRP-related updates, make sure to click the bell and subscribe to our channel. Policy for the Internet Age U.S. agribusiness attorney John Deaton has updated his previous comments on the settlement and the ongoing legal conflict between Ripple and the SEC. Deaton claims that there have been no serious negotiations between Ripple and the US SEC. According to lawyer Deaton, the amount resolved in the Ripple action would depend on the success of Coinbase's motion to dismiss the SEC's claims. Remember that in August the San Francisco exchange asked a court to throw out the SEC case? In its motion, Coinbase claimed that the SEC violated due process by abandoning its interpretation of the securities laws. In response to the SEC's rejection, Coinbase filed a second motion earlier this week. Deaton has previously acknowledged that the Coinbase motion has teeth, and the oral argument for the case is set for January 17 to 24. After that date, a decision should be made within the next 60 to 120 days. The pro-XRP lawyer speculates that if Coinbase won the litigation, the SEC would be forced to shift its focus to the settlement with Ripple. However, Deaton claims that if Coinbase fails to request that the SEC drop the accusations against you, the Ripple lawsuit will not be resolved through mediation. In addition, attorney Deaton discussed his impressions of the SDC Ripple lawsuits and the next steps in the remedies process. Keep in mind that the next phase of Ripple litigation is the remedy phase. At this juncture, the court must determine the appropriate penalty for Ripple's violation of federal securities laws in its sale of XRP to institutional investors. Attorney Deaton said that the sentencing phase is similar to a second case, requiring documents, bank statements, and on-demand liquidity transactions, in addition to the questioning of witnesses. Deaton claims that the SEC is so ashamed by the developments in the lawsuit that it is asking for $1.770 million in damages. He believes that Ripple will drastically reduce the total and is trying to exclude OBL-related XRP sales, salary, and travel expenses. As a result, I anticipate that Ripple will attempt to dramatically reduce the $770 million. Tens of millions of dollars in legal fees, he added. According to attorney Deaton, the judge and Elisa Torres may not issue a definitive ruling until late summer. Deaton bases this on the possibility that the period of remedies for the Ripple cases may last for a good many months. He recalled that 8 months of extra litigation were necessary to reach the penalty phase of the SEC versus LBR lawsuit. CTO of LBR and its Jeremy Kauffman, after an intense 8-month legal battle over remedies, was deposed once again at the stage, as per Deaton, and the parties filed several papers. It may take a full year for any party in the SEC versus Ripple dispute to submit an appeal, according to attorney Deaton. The SEC has made an effort to appeal the court's summary judgment ruling from July. However, the court denied the SEC's motion to certify an interlocutory appeal. Many legal experts feel the SEC should have filed an appeal sooner after dropping his complaint against Chris Larsen and Brad Garlinghouse, 2 executives of Ripple. It is worth noting that Deaton estimates any party may take up to a year to formally submit an appeal. Please be sure you're enjoying the video before subscribing and clicking the notification bell. See you later, bye.